everyone. Welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here with another quick update from the global financial scene. Let's dive straight in. First up, Bank of America's latest monthly survey is pointing to a remarkable shift in sentiment among global fund managers. So in a nutshell, they're showing love for the US and skepticism about China. Let's get right to it. A considerable number of fund managers are feeling the US economy is heading towards a soft landing, and many reckon US interest rates have already peaked. By the way, we talked about that in yesterday's podcast. You should take a look. Now, China, however, isn't getting a lot of optimism. Its growth expectations have shockingly dropped back to what they call lockdown lows, with zero optimism this month. That's even lower than what we saw just before China reopened in September of 2022. Now, what about Japan? I mean, we barely ever talk about other countries in Asia other than China. Well, Japan is back on the radar for fund managers participating in these surveys. And also, tech stocks, despite being very crowded right now, are still in high demand. Now, let's dive a bit deeper into the Fed's moves. About 6 in every 10 managers believe that the Fed's journey of rate hiking is done. Let's compare that with just a couple of months back in July, when almost everyone believed the Fed wasn't done yet. A vast 74% expect the first Fed rate cut either in the second quarter of 2024 or in its latter half. Now, let's talk numbers. The survey covered responses from 258 participants who manage a whopping $678 billion. That's a lot of money, and their opinion definitely matters. Okay, moving on from the numbers, I do want to talk about a big shift in fund allocations to US equities, which has risen sharply and making it the first time they've been overweight since August of 2022. On the flip side, allocations to emerging market equities have seen a drop, especially due to worries over China. So where are these funds going? Another good question. Well, top trades this month indicate a leaning towards big tech and Japan equities, while there's a considerable move away from China equities and REITs, real estate investment trusts. And on a final note, the largest concern or tail risks on their radar, high inflation still tops the list, followed by geopolitical tensions and a potential credit event on a global scale. And that's the quick summary for today, everyone. I hope you enjoyed it. I will definitely keep you updated as soon as the results for October are out. I'll see you tomorrow, and don't forget to show some love and rate our podcast. Give us a like and share it with your friends and family, because sharing is caring. Cheerio.